Wow, Argentina's stock market skyrocketing on its first day back to trading after a stock holiday that occurred yesterday, which was just shortly after the election over the weekend in Argentina. In America, we've got some red numbers out of some of these early consumer reporting businesses, and folks now considering, is this the beginning of that recession feeling that everybody is worried about? You've got Bitcoin sitting 37,000, oil down about 0.5%, but still kind of $82 for Brent. So when I say it's down 0.5%, I feel like it hasn't moved at all. You've got gold sitting at 1993, 1 year away from the best year. Then we've got the indices down slightly as not Bed Bath and Bed, Best Buy actually ends up cutting some of their Black Friday sales forecasts. This Black Friday will be pretty critical. I think a lot of folks are thinking the consumer will be totally fine. I personally think that the consumer has substantially and will substantially slow down. That this is really going to be the season where what you really do is you end up hitting the nail in the coffin for the Fed to say, hey, all right, we've done enough. That's my take. Oh, we'll see. Obviously, Best Buy's a forecast little on the soft side this morning for Black Friday. Black Friday's obviously this week. It will be pretty exciting from a data point of view. Obviously, that means the courses have a sale over at meetkevin.com and StackHack for licensed financial advice. So what we have for Bed Bath, let's look at the actual numbers here. Adjusted EPS actually comes in at a beat, 129 versus 118. Revenue 976. That's $9.76 billion. And that is slightly below the 9.9 we thought we were going to get. Comp sales at Best Buy down about 6.7%. That's not great. This is a company that is going through its sort of earnings recession. Remember, an earnings recession is when you have 2 quarters in a row of negative growth, and we have seen that for a lot of different companies all over the place. So that is something worth paying attention to, Fed. And remember that today we will actually have the Fed's FOMC minutes. So hopefully we will get some kind of reflection from the Fed on how they're actually starting to really affect the true economy of businesses and employees and sentiment and everything related to the state of the economy. The FOMC minutes will be coming out on or at 11 o'clock today Pacific time. That's 2 p.m. Eastern time. I'll be covering that live. I'm going to this is just going with we are keeping the market open and closing live stream on this channel here, which means we will be covering Nvidia on this channel at market close. So make sure to come for the Nvidia earnings call at market close. However, the Fed's FOMC minutes, and if there's any kind of really topical breaking news, I'll still go live on the main channel. So we'll be live for the FOMC minutes on the main channel. I realize that I'm seeing some comments. People are suggesting, hey, I just want to know, I wish they were all in one place. We're probably not going to go back to all in one place because we like what we're doing right now and it's working. We're probably not going to go back to all in one place. But what we will do is we will update the Meet Kevin app, which you can get in Android or Apple, and then you'll have all the videos in one place. And we're also going to add a new feature where we start doing like text-based summaries of the videos. So I think that'll be really cool. So stay tuned for that. I'll let you know when that's ready. The app exists already. It just doesn't have all the video channels on it just yet. It's coming. So Best Buy Q4 comp sales, and this is their forecast. So they just reported Q3. Their forecast is for a 4.5% midpoint decline in comp sales. That's compared to the estimate, which Wall Street was already expecting a decline of. The Wall Street expected decline was 1.1%, 1.12%. And we actually got this decline here of about 4.5%. So substantially greater. Actually, no, that's more. Wait, the midpoint, the range here is 3 and 7. I feel like I'm playing poker. The midpoint's actually 5%. So a 5% decline versus 1.1 expected. That's ouchies. And this is how deflation begins, because when consumer product and consumer goods companies start seeing negative sales, the way that they raise that demand again is they lower prices. It's very simple. Yeah, and yeah, that does mean I think we will start seeing product deflation, not just disinflation. Listen to this. In Q3, quote, sales declined most in October. And even though they're guiding for negative 5% year over year for Q4, in November, sales were actually down 7% so far in just the first 3 weeks of November. They suggest that consumer demand suddenly weakened throughout Q3. This is probably right along the same time as the attack on Israel, not suggesting that that had a direct correlation, but it could have indirectly hit on sentiments of, oh my gosh, the last time we had an invasion into Ukraine, what ended up happening was we ended up getting screwed with inflation for substantially longer. And that's a no bueno. That's a no bueno, no bueno. Anyway, so we'll pay attention to Bed Bath & Beyond and the rest of their earnings call. You did have Dick's Sporting Goods. They're actually up in the pre-market after they reported. Both of these companies are nominally moving, though. I mean, these aren't massive moves. Lowe's as well. But if we go to Bed Bath & Beyond, I keep saying Bed Bath & Beyond because the ticker for Best Buy is BBY. Bed Bath & Beyond is BBBY. What? It's just annoying. So Best Buy down 4.4%. Lowe's right now is down 3.7%, which reported as well this morning. Dick's, though, positive, about 8%. At the same time, in pre-market, you got Enphase Tesla up about 0.5%, while Apple's down about a quarter. AMD is down about 0.4. Nvidia earnings today. It's going to be a big deal. Going to be a big deal. It could really make or break this market. A lot of people expect down about 0.25% at the moment. It is over 500 though. It's at 502. Yeah. I don't know. Let me just put it this way. I was at a sports grill and bar the other day, and I was wearing my nicey, vest, New York Stock Exchange, and the person next to me kind of keeps looking over. He's like some, I don't know, maybe 65-year-old dude or whatever. And he's like, you know what? I made a lot of money off of Nvidia stock. And he's going off about it. And I'm like, oh no, no. Yeah. That's usually not a good sign. We'll see though. Anyway, so Dick's Sporting Goods, ironically, it's like the opposite of Best Buy. Dick's Sporting Good actually raised their outlook. Now, in fairness, Dick's has gone through a little bit of a poopy-doopy correction just over the last few weeks, but it's actually done pretty decently over the last, few, well, quite frankly, since the crash of the end of 2021. They've been volatile, but they're certainly higher. So they reported a beat of $2.85 versus the $2.53 expected. Raising outlook, looking at still spending $550 to $600 million in capex. You've got fiscal year comp sales expected to come in at a midpoint of about 1.25% in growth versus the 1% expected. It's pretty normal or pretty nominal, right? Pretty nominal growth there in EPS, whereas Best Buy definitely getting hit worse. So it makes you wonder if Dick's Sporting Goods versus consumer electronics, is this like, hey, people have already bought their computers, they've already bought all their Philips Hue lights, they've already bought all the junk that they need for their home, the refrigerator, their appliances, whatever, and is it now time to to move on? So, to sporting goods. All right, let's see Lowe's. Keep in mind, Lowe's is should be getting hit like Etsy, or not Etsy, Enphase, because people are just investing less into their homes right now. I want you to remember what the CEO of Home Depot said at the beginning of this crisis. That is around Q1, and we covered this. Q1 or so of 2022, we argued what the CEO of Lowe's, or of Home Depot rather, had to say. And what they said is that when housing prices are going up, people feel like they are making an investment into their home by spending money on it. When housing prices are going down, people feel like they're spending money. That's it. So it's investing so you feel good versus just spending money so you don't feel as good. So very interesting. I wonder if the same is probably true in like other realms as well, like, you know, education. I'd be really curious to see sort of like broadly what's happening in education. But I mean, usually in down times in the economy, those are the best times to get it, to get new perspective, or to learn a new skill, or to learn, I don't know, I like go on Coursera or wherever. You know, I'm not trying to pitch my own stuff, but the point is, I wonder if during bull times people justify spending on educational products because it's an investment and it's fun to invest, and maybe in bear times it's just seen as another expense, right? So Lowe's drops 3.6% after cutting outlook lower than expected on do-it-yourself sales, citing do-it-yourself spending for the comp sales decrease. Well, you can't just suggest, oh, it's only do-it-yourself spending. Bro, 90% of the people who shop at Lowe's and Home Depot are doing so to fix up their home. You know, it's not your commercial contractor that's bringing all the revenue in. It's the homeowner. You know, it's so I love this. I think of this as a feature, not a bug. For, you know, the amount of stuff that we have going on in our home's relatively small. It's like 2,200 square feet, and it's on like a postage stamp lot. I don't know. Well, I'm going to look up what our lot is. My guess is it's like 4,000 feet or whatever, the lot, which is tiny. We don't really have a backyard or a front yard. There's no driveway, you know, it's in an alley or whatever. And, you know, we've regularly thought like, oh, you know, should move or whatever. But we love the neighborhood and the location so much we don't want to. But B, you know what's so freaking wonderful about it? Yeah, the lot's 3,900 feet. What's so wonderful about it is, guess what I don't spend money on? Landscaping, a substantial amount for lawn care, new plants, new rocks, gazebos, you know, pergolas, spas. Although you could fit a spa in there. Like the amount of spending on extra stuff for the house is so nominal because there's nothing left to do. And so it's like forced less spending. You know, it's when you have like a 5,000 square foot house and an acre of land. Now we need a barn. Now we need a larger driveway. Now we need to get some sports cars to fill up that garage. We turned our garage into a mommy and daddy den to escape the children. So anyway, it's great. All right, so that's Lowe's, that's Best Buy, that's Dick's. Some differences really here. It'll be interesting to see. Again, today we are minutes of the November 1st meeting. Will give us a little bit of insight. Folks expecting the Fed to show more balance in terms of their concerns about the market, whether that's labor cooling, signs of slowing consumer demand, credit demand. You know, we've obviously seen a surge in longer dated treasuries, which some of that since the meeting has fallen. In other words, like on the 10-year, around the time of the meeting. Actually, we could just look at the chart here and look at it exactly. So around the time of the meeting, on October 19th, 1019, we were at 4.9 at the meeting. We were at about 4.78, 4.87 and 4.78 going into the meeting. Sort of fell after that. I suspect the Fed is actually somewhat okay with that, but we'll find out. So Abercrombie also reported. I was just surprised they're still popular, but let's take a peek at their stock here, and then we will see what they reported. Mixed results though. Okay, their stock's down 5%, but wow, look at their stock. What the heck? Like anybody in Abercrombie right now is like, I don't care. It's down 5%. Look at their stock. What happened? Holy smokes. So this is literally since May. All of a sudden, Abercrombie and Fitch became sexy again. Holy smokes. It literally tripled. It tripled. This is insane. Absolutely insane. So, okay, all right. Okay. Abercrombie snowballing. Let's get the actual earnings here and see what we got. Yeah, no, I mean, they've been crushing it lately. Yep. Abercrombie revamped their marketing. They got they were boycotted during a scandal. Well, obviously not their stock. Dish at a 1-2 price to earnings ratio. They're 35% short. You know, there are a lot of people looking at Dish as a potential value play. There is a real risk that Dish is a value trap. Like I'll tell you, the chart here in the last year and a half looks somewhat similar to Etsy. Sorry, I keep saying Etsy. Enphase. Oh, Etsy's down too. But you know, I see a world with Enphase and their massive cash flow and margins and their great products in it, you know, over the next 10 years. I don't know that I see a world with Dish TV anymore. You know, you've got so much cord cutting going on that do you really need satellite internet or satellite TV? Certainly don't need satellite internet. Well, unless it's the you know, low Earth orbit satellite internet like what Starlink has, and that's actually pretty good. But the OG sats here, you know, I don't know. I'm not so convinced about that one. But Kevin, if you want to have a lot of kids, so you can have a garden with just grass, get a robot lawnmower, and kids can have space to play. See, the beautiful thing is we have a neighborhood with plenty of space to play. Go, be free, children. Canada CPI 3.1 in line / lower than expected. Okay, we'll look at that in just a moment. I want to look at that. And like JPOW speaking this daytime, CPI, big earnings, etc. I feel like that is one of the best things Meet Kevin does.
Just close the fucking door. Close the door.
Perhaps a checkmark system of things happening this week. Okay. Checkmark system. You mean like a checklist? I love checklists. Literally just yesterday revamped my checklist. Okay. So what was I going to do? Oh, the CPI thing. Right. Okay. So, okay. After Abercrombie. So Abercrombie Fitch net sales, 1.1 billions. 1.1 billions in sales versus the estimate of 9.87. That's a nice beat. Comp sale. Okay, so what is this? People are buying clothing but not electronics. Okay, all right. Outlook's quarterly sales surges 20%. That's on probably EPS here. My goodness, what is it with this? All of a sudden. Oh. I don't know if it happens to y'all. Stop that. Oh. But I have these two ACs over here, and it changed to this mode where it kind of starts fanning like this rather than just shooting up into the air. And it's like it's killing me when it blows at me. It's too cold. It's coming out like 50 degrees. Okay, I fixed that. Anyway, sorry. Let's look at this Canadian CPI. It's like this is where the Germans are gonna go. Es gibt mir einen steifen Hals, verdammt nochmal. Any German will understand. Anybody else will be like, you're nuts. And yes, that's how it works. All right. God. Oh no. What is this? Okay, yeah, Canadian CPI just came out 15 minutes ago. Month over month was expected to be 0.1 match. CPI year over year 3.1 match. All right, somebody wanted the economic calendar for the United States of crap to happen. You want a list? Here's a list. Today, we will have the privilege of getting Oh, wait, hold on. What is this? We just got Philadelphia Fed non-manufacturing activity, -11. There was no survey, though. Okay, whatever. FOMC minutes come out today at 11 Pacific time. Then we'll have Nvidia earnings. We'll cover on the Meet Kevin live channel. Initial jobless claims tomorrow, along with continuing claims. We'll see if they stay a little elevated at about 227. That's the survey. And then, of course, that sentiment survey Friday. Sorry, it's 22nd. No. U of M Michigan it's usually released on a Friday. It's coming out early this week. It's coming out Wednesday. Then we have Thanksgiving Thursday. Friday for Black Friday, we're going to start with U.S. manufacturing PMIs and composites. And then on the 27th, we'll get into new home sales, manufacturing indices, and PCE, Fed's preferred inflation gauge. All right. Okay. All right. Not bad. So the big thing, obviously, is going to be the release of Nvidia earnings. I already did a cover, by the way, of the Nvidia earnings expectations. So if you want to check out my expectations, just type into YouTube "Meet Kevin Nvidia," and then you'll specifically see it. So I think that'll be pretty exciting. I obviously will be covering that live. What I'll probably do is I'll probably just keep going live until the earnings call later today, mostly because I'm so curious and excited for Nvidia earnings and what it means, because I think it's going to be a pretty critical catalyst for the rest of the market. So we'll see. Okie dokie then. So let's jump in here. Okay, yes. There we go. Okay, fixed. Done. Sorry, I had to fix a couple things. All right. Okay, Opsar. After many days, that is done. So, I see you all in the comments. You can't hide. All right, so I wonder how Target will do this holiday season. Yeah, it's sad, Target having gone through their really, I mean, what do you call it? The woke phase or whatever. Now, I'm not saying that's right or wrong. I'm not here to impart an opinion. I'm just here to say, if I had to go to either Walmart or Target, I'll go to Target, man. I don't know. Target's nice. Well, unless you go to a Target in Canada. Targets in Canada suck. Targets in Canada are like Walmarts in America. Yeah. So this is interesting. And I tweeted about this yesterday. Enphase CEO and a president bought 1,118 shares. That worked out to about $108,000, I believe. So that was pretty cool. Yeah, here it is. And he bought for about $90.2 a piece. So a little bit of a bullish signal there. By the way, yesterday, if you want to see me go a little deeper into some fun things, Tesla, Israel, well, there's not much fun with Israel, but Andrew Tate, Trump, OpenAI, Argentina, Tesla was in there. Make sure to check out the Meet Kevin podcast we did yesterday. It was just myself and Mikey yesterday. It was really fun. So check that out. That was enjoyable. I quite enjoyed it. Okay, so let's yeah, there we go. I think Gary Black is 100% on board here. And Gary Black talking about the most compelling chart for Tesla. You should have a suspicion of what it is. I've said this many times. In my criticism against that clown analyst yesterday who said cancel the Cybertruck, which I changed the title for that video. I realized it was a little misleading, so I fixed that. My bad. Gary Black says this particular chart here is the most encouraging chart that you have for Tesla. As you can see, it is simply a chart of the forward look of interest rates. Womp, womp, womp. Totally makes sense. Let's look at the Federal Reserve's terminal Fed funds rate. It should be right about 5.35. Let's just see if that has moved at all. At the same time as we look if the Fed's effective terminal rate has moved, we're going to go pull the 5-year break evens. and see what's going on with inflation. We'll also look at the 5-year forward, although that one's much more volatile, in my opinion. Well, I mean, you can look at the chart too and see it. But anyway, Fed terminal fund rate, wow, 5.337. It's now trending down, as well as the 5-year break even down at 5. Y'all might want to see this. I'll pull this up. Hold on a sec. 2.23 now on the 5-year break even. 5-year forward break even 2.298, and then again that Fed terminal Fed funds rate 5.37. These are the directions we want these numbers to go. We want the terminal rate to come down. We want to see the break evens come down. These are very important figures, and I'm excited to share them with you. So here's the first one. This is the Fed's terminal Fed funds rate. So you can see that here on the right, we are trending down off peak, which was really around that September to October period. The worst of our stock market, by the way, was about that. As you can see, it's the fat. As soon as we had the fat over here. North Korea launches what it claims to be a spy satellite. China's president, Xi, conflicts is to implement the two-state solution, restore the legitimate rights of the Palestinian nation, and establish the state of Palestine. Okay. North Korea may have fired a missile. Japanese Coast Guard. Japan issues emergency warning for Okinawa Prefecture. Tells residents to take cover from North Korean missile threat. Please just be a spy satellite. We do not need another conflict. China's president, all parties in the conflict in Israel should immediately cease fire and hostilities. All right. Here are the break-evens. This is the 5-year forward break-even. Look at that pain. This right here was the rough stock market period. And you could see this was a lot of the fat. We really want to, I mean, it almost looks like we're somewhat back to that trend. Although we do want to see that start trending down. And it will. And then, of course, here's your near-term 5-year break-even, which is much, much more stable. But also, again, that pain period in the stock market right here, you can see it was the fattier part of the chart. All right. Somebody here says, I don't have any friends with a TV subscription. What's your view on Robinhood stock lending? Well, I mean, if you're asking me, do I think you're going to lose your stock if they lend it out? I think that's unlikely. Your SIPC insurer, well, SIPC covered the value of the equity in your portfolio. SIPC covered. If Robinhood lends it out and goes BK, you know, you'd be able to submit a claim to SIPC. But you know, margin call rules and maintenance rules are so strict that it's a lot harder for the brokerages to go BK in the stock market, you know, compared to the crypto market, because there's actually regulation. So I certainly would be less worried than a crypto brokerage. All right, so let's see here. YouTube TV, heck yeah. All right, Sniper Trading wants to snipe some views. I like the name. Question: have you made a video on how high interest rates will affect the coming in the coming decade? I don't really know what the coming in is, but if you're telling me what I think about high interest rates in the coming decade, I think we won't have high interest rates in the coming decade. Housing only goes up over time. People should be buying a home today and refinance when rates come back down. Unfortunately, that is what people said in 2007, and so there's still a lot of shell shock. But just refinance when prices are lower. The only reason you should buy is if you can afford it. It's that simple. And if you can afford it, buy. Target has been selling Pride shirts for 10 years. Yeah, and honestly, it's old news that they've, you know, commingled the little boys and little girls sections together. That pisses me off still today. Like, if I needed to buy children's clothes, I will just go to Amazon now, rather than Target. Screw that. And I'm not sifting through all the girls' clothes to find boys' clothes. I'm not doing it. I'm not wasting my time. It is an insult to my discretion as a consumer to have to sift through children's clothes where all of a sudden I'm going from a football t-shirt and rocket ship t-shirts to dresses. But again, this isn't. I'm not trying to make any kind of like social or woke statement here or whatever. Just from a practical point of view, I'm pissed. It's just pure practicality here, man. Okay, I don't have a lot of time, so I don't got time. Certainly, I don't got time for that. All right. So, what is going on with? Yeah, yeah. No kidding. Okay. Well, let's actually cover this first because that's actually quite interesting. So. Here's what Wall Street has to say for you today. The upside momentum of the tech-heavy NASDAQ 100 futures appears to be based entirely on what happens on Nvidia later today. The world's most valuable chip maker, which saw revenues more than double last quarter, is now expected to grow third quarter sales by 171%, making it the fastest growing member amongst the Magnificent Seven. Investors will also be closely watching updates regarding U.S. export restrictions on sales to China. Right. Although Nvidia has made it clear they expect that to be, quote unquote, immaterial relative to the pain that we've seen. So, yeah, we'll see. Nvidia's more than 240% surge this year has contributed to more than 800 points, or has contributed more than 800 points to the Nasdaq's gain, as the chart below show. Oh, okay, I see a contribution of Nvidia. Oh, interesting. Okay, yeah, you might like to see this chart. This is very interesting. All right, stand by for a chart on the contribution of various different big boy stocks to the Nasdaq 100. Oh, it's not showing up. Hold on. We might have to wait an extra minute. I took a screenshot, but it has not beamed over. Scotty! Ah, here it is. Got it. Now I got it twice. There you go. Look at that. That's actually kind of neat. It shows you the index, which has moved, which is, at 5,087 for the NASDAQ 100. And Nvidia has contributed 826 points to that. Microsoft 720 or 760. Tesla, look at the laggard, has only contributed 286 or 89 points. Wow. Incredible. Can you explain how Alibaba has fallen? Well, I mean, this is a bet. Right now, Alibaba is a concern over the Chinese economy. It's not just the company itself. You have to be careful. These are lower float ADRs. It's a great way for Alibaba to raise money from Americans. But, yeah. Jonathan, don't be sad about Tesla being at the bottom of this. The way to look at it is the boom is still ahead. It's when you're at the top, the concern is, are you going to stay at the top? It's a lot harder for you to stay at the top. I'm more concerned about Nvidia. Did he sell his jet? Why are people so worried about the plane? It's right here. It's right here. And no, it would be very stupid to sell the plane because you 100% write it off in the year that you buy it. And then you basically get 2 years free. Like all your expenses are basically free for 2 years because of the taxes you saved. Then when you go to resell, you're screwed because you have to pay all the taxes back, and then you kind of didn't have 2 years free. So usually when you get into the plane market, you're committing to it almost forever, unless you're just giving up and crawling in a hole and dying, which that ain't me. So usually you actually think about getting a bigger plane, so that way you could milk some more tax benefits again. So, but no, yeah. It's very interesting because when you understand the dynamics of how it actually works, you realize that the question itself is not very, very wise, not very informed, I should say. I'm generally curious about what happens if Nvidia misses. Yeah, everything plummets 5% at least. Nvidia down 10%, Microsoft, QQQ, I don't know, all these suckers will probably be down 2-3%. Tesla will be down 30% because that's obviously how it works. Too late now for TMF. I mean, my cost basis is higher than where it is now for TMF. So clearly, I personally don't think it's too late, but that's not personal advice for you. Someone here says, I'm enjoying the morning live stream. I listen while at work, AirPods on, and playing close attention. Oh, that's cool. Thank you. Witnessing the birth of Meet Kevin Airlines. It's very difficult. I would say it's very difficult to compete with NetJets. NetJets is a very good company. Wheels Up is trying to do that, but he's got an oopsie doopsie. All right, next up, we have Black Friday comes early. What is going on here? Black Friday. Okay, Black Friday comes early for Nvidia options buyers. Oh, what? Nvidia's earnings release after the close is another key driver to watch. We're clearly at the point where the company has become macro in its own right, given the importance of AI driving stock market returns, especially at the same time of the OpenAI drama. For what it's worth, the highest estimate for today's adjusted EPS is $3.58, with an average of $3.36. At the money, straddle. Oh, yesterday, by the way, I was saying, if you're going to play this, straddles might be the way. At the money, straddle. The at the money straddle expiring Friday settled at $38 with an 86 vol. While that may seem high, Thanksgiving decay takes a bite, right? Because you're not actually going to be able to close your 0-day straddle for Friday. Well, I guess it's a weekly, right? Because you're buying it on Wednesday. You're not going to be able to close your weekly straddle Thursday morning because the market's closed. So you're going to pay theta decay, which is a lot. On an option expiring Friday, it's a lot. Either way, if and when Nvidia eventually disappoints, or sooner than later it will, the tech stocks Uber Ales theme will get a more serious test. Okay, Mr. Cameron Bear. Actually, he's brilliant. He's pretty good. And he's not wrong. Okay. CalPERS, that's California, may do better by stocking up on ETFs. The best deal in life is to get a free ride. And they're talking about ETFs. ETFs are so good because of the reallocation tax benefit. It is like you should find your favorite actively managed ETF and have your money in it. That's not personalized financial advice. Maybe I shouldn't say that. But it's solely from a tax POV. And I talked to an accountant about this, although I would suspect that a lot of accountants also don't understand this. But the fact that you could 1031 shares within the ETF, like the fund manager, can tax efficiently rebalance within without passing taxes onto you, it's kind of like trading in a Roth, is a game changer. Total game changer. I thank Mr. Vogel of Vanguard for that. All right. Next up. Let's see here. That is messed up. Screwed it up again. Dang it, Kevin. It's just more mistakes. What is this? The more you do, the more mistakes there are. Maybe just do less. Maybe just quit and die. Or not. Where's this going? Hold on a sec. Hello?
A lot of money at Salesforce because you know what? We're kind of like the cruise. You know, the car.
Yes.
We're kind of nowhere. They're no. No! You just say, hey, Mark, what do you got for me? And then Mark gives you a really good deal and you move on because there's no company.
So you think OpenAI is done?
Kind of, yeah.
You think you think Salesforce and Microsoft will be willing to take on hundreds of pretty expensive engineers?
Yes. I think it's a jailbreak. You've got a recruitment list. you just call them and you like Mark could
They
call.
still have a good amount of
All right,
intellectual
talking about
property.
the end of OpenAI here. Yeah, no kidding. What happened to your IT guy? So McKay and IT guy are vlogging, and I'm not sure where they are right now. They're either in Northern California, in Utah, maybe they'll head to Colorado. I have no idea. They've got to figure that out. It's all producing content for HouseHack and documenting some of the stuff we're doing. Because remember, we have a separate, I know everything's separate channels now. It's hard to keep up with, but there's a separate HouseHack channel now. We haven't put content on it yet, but we will. And it's just going to be exclusively transparency on HouseHack. And so stay tuned for that. There'll be a lot of stuff. Yep. All right. So is selling a straddle a thing? Absolutely. Yeah. So you could just go at the money and then basically just sell a call and sell a put. Yeah. And then you take the credits. And then you will actually get the benefit of that extra day of theta decay. Extra day of theta decay. Have a better board when HouseHack goes public. You know what? People, even on the podcast yesterday, nobody knows anybody on the board except Ross. Sorry, we're talking about Ross. Poor Ross. Any update on HouseHack? It's great. Okay, so yeah, we are buying. We cannot wait to go through and just basically give you everything. Like what we'll do is we'll do like, here's the average wedge deal, here's the average price point, here's what we're gonna do next. It's pretty exciting. All right, so where are we? Alex Karp sold a bunch of Palantir shares yesterday. What are your thoughts? I don't really care. You know, he's allowed to make some money. You know, when the stocks do well, people sell so they can, I don't know, finance a new plane for themselves or whatever they want to do. I don't know, you know. So I don't know if it's necessarily a bad signal for Palantir. I love what I see with Palantir, but who knows? Maybe it's a sign of things to come. Who knows? Nobody knows. Not even Karp. So let's take a peek. So right now, you've got Palantir down about 2% in the pre-market. I think a lot of people were hyping up some like NHS or whatever. I think it was the NHHS, National Health and Human Services Partnership. Usually when these things get announced, the stocks go down because it's so widely anticipated. And it's buy the rumor, sell the news stuff, right? All right, so the market is a little on the red side today. It's honestly because everyone's tenuous. Oh, why am I doing this to myself? Sorry. This is really annoying. Stupid. The market's going to be tenuous. Look, it's very simple, okay? The market's not going to do anything today until the FOMC minutes at 11 and Nvidia earnings at 1. All right? So it's probably just going to go down. And that's not a surprise. Everybody's just going to be sitting around waiting to see what happens for these two items here. Oh, wow. Look at when you zoom out on the monthly chart for Zoom. Oh, here. Dang, look at that. It's like a black diamond. You know, on one side you have to take the gondola up because it's so steep. And it's straight down. Oh. Anyway. Hey, who's ready to go skiing? I'm ready to go skiing. It's still a little too early. I probably won't go skiing until I got a crap load of work to do too. Probably until closer to Christmas. But I get excited to go skiing. I love skiing. My skis are ready to go. I finally bought skis. I had my own snowboard forever, but I stopped snowboarding. And I always thought I might go back to my own snowboard, but then I never did. And then I'm like, that's it. I'm buying my own skis. And they're so good. Now I've become one of those people where it's like, those are my powder skis. You know, I'm like, oh no. So yeah. they're actually, they pay for themselves if you go enough days, because you start spending money on rentals. It starts getting expensive and it takes so much time. Anyway, so what do we got here in the pre-market here? Best Buy down 4.2%, Lowe's 3.6 to the downside, Zoom 3, Ubiquity's down. Ubiquity's been pretty volatile the last bit here. Shot up a little bit and it's now giving back up a bit. Etsy, let's take a peek at Etsy. How are we doing here? Yep, nope. Etsy's at the bottom, basically on the fibs. Let's go to the day chart. It's breaking back into the fib range. That looks somewhat like an end phase. Trade Desk sitting at 67 bucks. I still think is a pretty good deal. Look at that bounce you've got on end phase there. It's pretty nice. And this channel, this is the most disgusting shortable channel I think I've ever seen. It is so perfect, this channel. I mean, it just keeps being correct, which is scary because it doesn't end until it's negative $20. Okay, we don't actually think it's going to go that low. But once it breaks out of that yellow, oh, I cannot wait. I cannot wait for end phase to break out of that yellow channel. And it will as rates come down. So let's look at what that yellow channel's price is. Like if you're looking at end phase, I really believe this is a stock that has a 4 or 5x in it. Like this is $400-500 as interest rates come down, and over the next decade, it's probably even substantially higher. Like at this point, there are probably more gains to be had in end phase than there are in Tesla. At least in the next few years. No guarantees. I own the stock. It could go bankrupt. I don't think so, but look at the cash flow. There's no way. But anyway, so we need to break out at probably about 115 to 120. If we could break 119, we will break the downtrend and we will break the lower fib and the lower support. Like we will break 3 catalysts by breaking 119. Honestly, then we'll probably also be breaking the 100-day moving average. Like the convergence of crap that gets broken here is glorious. And that's solely from a TA basis, which somewhat aligns with what you're seeing with rates and rate expectations. Or it'll go BK. Anyway, Nvidia is dropping to about $500 right now. Still pretty good. Honestly, everything's just tenuous right now. Tesla's down about 1/3%. Didn't actually have much of a good day yesterday. It was only up about 0.5%. It was a little stuck in the mud there. It felt like everything else was doing better than Tesla yesterday. I mean, look, the Nasdaq was up 1.22% to Tesla's 0.55. You know, that's a sign that you have like, I mean, Tesla usually has a beta of 2. You know, it should be up 3% when the Nasdaq's up 1.5. But I think that's changed. I wonder. Let me see what the beta shows up as. Historical beta. So it's definitely dropped. Adjusted beta, which is the forward-looking one, sits at 1.6. Historical beta 1.9. So yeah, days like yesterday are dropping Tesla's beta substantially, but not its alpha. So far, that alpha is positive for the year. It was just negative yesterday. We'll see what happens. All right, next. So, okay, price to perfection, Nvidia stock. Oh, shut up. No, they might be right. I don't know, man. I still think you know, you have to be careful thinking about this recessionary time as recessionary for Amazon, Meta, Microsoft, Qualcomm, Broadcom, all these big players. Maybe not Qualcomm, Broadcom, maybe more like Salesforce. Basically, anybody who's building out servers and trying to innovate their infrastructure. They are the rich ones able to spend money. Apparently, the people who aren't spending money are people buying consumer electronics, small businesses, medium businesses, Ubiquity products, Best Buy products, appliances, Internet of Things, blah, 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 blah. That's where your problems are. So, but does that mean those are at a bottom? Maybe. All right. Let's see what they're yapping about.
Telling you how they're doing. But Dick's has got a real game plan. It's got the Super Dick stores that are really great. It's got
The super what stores? Super Dick? Is that what they call them? Super Dick?
learning for athletes, and by the way, it's not a joke; it's for real. They have a very robust plan of growth that is not going to be what I regard as foolhardy. And they have an app buried within it where you can kind of watch a game. And it tells you everything about it. And, you know, I had a daughter who was like a recruited athlete, and all I ever wanted to do was have it recorded so I could see it. This thing, which is right now only used for baseball, can be used for every sport. I think they're underutilizing it. And then repurchase 3.5 million shares. So they've got great technology. They've got fantastic same store. And they're just, these look like the old days. Carl, these numbers look like what happens when you've got tech going for you, AI going for you, same store sales going for you. Great back to school season. This was a tour de force quarter. This stock goes much higher.
It's not as good as the pre-market gain for Burl.
Well, Burlington puts this.
These are some funny comments. I love this. This is so funny. Yeah, we could go look at Super Dick's PP. I love looking at PP. Every day I spend time looking at PP. I generally look for large PP. You know, I prefer that over weak PP. So to understand a company's PP or their pricing power, we generally have to evaluate their ability to increase margins in a competitive environment. So, or have higher margins than their competitors. So, for example, Tesla's margins may be going down, but their margins are substantially higher than any of their competitors, which give them larger relative PP. So it's kind of like if you're in a group of you know, small PPs, the one with the largest PP is the one you want. So when it comes to automotives, you know, you basically have inverted PP, which is a very bad problem for companies like you know, Ford and GM and the legacy autos. You have potential PP at Rivian, but Tesla blows everyone out of the water. I mean, this is where the real big juice is. So, you know, if we look at, for example, an investor relations sheet, and again, PP is relative. You know, it's like where's the bigger one? So the biggest set, again, we're looking for margin to be increasing or increasing more than its competition, right? So let's do this. Let's try it really quick. We'll do a quick example. We're going to go in here and we're going to go to Dick's Sporting Good, and we'll see what Super Dick's are doing. And we could start with gross profit, which, as we can see, they've already calculated the margin for us, which is nice. You can see the margin declined slightly. You had about a 40 basis point decline on margin here. But you also, on income from operations, thanks to an increase in SG&A, which could be a way that they increase advertising or markdowns or whatever. Some companies hide some of their expenses for advertising and sales reductions in SG&A. You could see that their net margin went down about 315 basis points. So you have a 315 basis point decline. Let's write that down. And then we'll go to like another, you know, place where we can analyze PP, and that would be Abercrombie. We'll see how large PP is there. But so we have a 315 basis point decline on income from op. Okay, that's bizarre. What is that? What is that white line over there? Oh, that's like the edge of the PDF. Okay. And then we have a decline of gross profit. What is that? 40, 30, 40, 42 BP, GP decline. Gold coins, gold pieces, RuneScape. All right. Now we're going to go to Abercrombie, and this is very surface level what we're doing, right? This is just a very surface level look at PP. It's kind of like, you just open her up and you go, is PP going up or is PP going down? Simple. And then you compare, and then you get a better idea. So obviously there's a lot more to this. You start looking at cash flow and innovation and ability to expand. So there are a lot of things. There's performance, there are expectations of future performance. There's a lot of other factors that go into it. It's not just size. So if we go to our Abercrombie statement, we're going to go and grab, okay, so they also do a percentage of sales, which is nice. So here, whoa, look at that actually. Holy crap. Okay, so look at that PP at Abercrombie. Damn. So here, we just increased about 470 basis point increase in GP PP, and their operating income, well, that's not even fair. It went from neg to positive. So it went from an inverted PP to even having PP. Okay, well, oh man. So just on a GP basis, Abercrombie's ability to maintain and grow margins here is certainly larger. Now that's on a delta basis. Delta means change. So if we now look at them on a comparison basis, like if I put these PPs right next to each other, I have gross profit of 61. Oh, wow. What? Oh my God. Wait, what? What? Look at this. 35.13% of gross profit at Dick's. Then you go to Abercrombie, they're at 61% gross profit on sales. Holy crap. How are they losing money? That is such large PP. How are they net loss? Is this mismanagement or what's going on? Because that gross profit is amazing. Stores and distribution well, wait a minute. Wait, oh, they're lying. It's fake PP. Oh, it's a scam. Oh my gosh. Oh my gosh, are you seeing what I'm seeing? Bro, look at this. So at first I look at the gross profit for Dick's because I want to see the PP. And I'm at 35% gross profit. So I go over here to Abercrombie and I'm like, yo, how are you guys almost double the size? And then I'm like, wait a minute, you're lying. You have a disease. You're lying to me. Your gross profit isn't 61%. You took out your freaking stores and distribution. Bro, that's 40% basically, which Dick's has. Up here, see? COGS, including stores and distribution. So now when I do an adjusted PP comparison and I stop getting lied to, and this is stupid. Now you're only at 21 point, what was that? Minus 39.7, 21.3% gross profit. Now all of a sudden, that your PP don't look that good anymore. What the hell, man? Now it's growing. Even stores and distribution expense fell. That's why they went profitable from a negative. But come on, man. The Abercrombie gross profit is actually less than Dick's Sporting Goods. I mean, the difference in relative PP here is 66%. Dick's has 66% larger size of gross profit. This is crazy. Now, I think the reason the stock performance has done so well is because you went from negative to positive. And that's why Abercrombie's stock performance has been great. But this is just a quick example. I mean, did they finally go free cash flow positive? They don't even, when it's this bad, they often don't even show free cash flow. Here we go. Right. Yeah. Net cash negative. Okay. So we're negative on free cash flow. Not by much. Free cash flow is negative about $47 million. Actually, $47 million is quite a bit. Their net cash from operating activities was only $560,000 though. And then segment revenue, Hollister makes up almost half of the sales. But Abercrombie has more sales than Hollister. You know what it is? It's their jeans are good. The Abercrombie jeans are good. But maybe they're good because they're good for small PP, because, I mean, clearly the pricing power here is not that great. And Levi's is cutting prices for their jeans. Everything except the 511, so they could say they're not cutting prices across the board. Anyway, you know, and now we could look at other companies. I don't do this clothing stuff, though. Frankly, like, you know, I wear like $18 shorts. You know, I don't really care. These are great for squats, by the way. You should see me do squats in my $18 shorts. That is the new channel we're making called Meet Kevin, MEAT. Okay, we're not actually doing that. That's the workout and cooking channel. That seems like there's a teeny little bit of demand for that. Okay, so gold testing 2,000. Hedge funds looking for conviction. Yeah, whatever. I don't care. FOMC minutes day. If you're just now joining, remember we have 11 a.m. We're going to have the FOMC items. And then, of course, I'll cover that on the main channel. And then we will have on the... we'll be doing the closing live stream on this channel. This channel will have the closing live stream covering the Nvidia earnings. So do make sure you come for the Nvidia earnings. I'll be covering them live, and then we'll be watching it all. Let's listen in here for a moment. What is this?
Ever heard of? Do you know who that is? I would say Michael Jordan, to be honest. And do you remember Michael Jordan's jersey numbers when you were playing? Was 23?
I know they're doing some nonsense here, but the bell's about to ring. We've got about 90 seconds to go before the bell rings. I'll also be doing a politics live stream at 9 a.m. again. Usually it's just about a 15-minute or so catch up in what's going on in politics. I actually enjoy it. A lot of people, I think, enjoy it, but we'll see. Who knows? You know, I get it. A lot of people are like, Kevin, I just don't want politics, and that's fine. You don't have to watch it. But it is something that I'm going to work on growing over the next year, election year. So I'll be, my goal is just to give you as much of an unbiased POV as possible. And then it's segmented. So when you're in the mood for politics, it's there for you. So DIC's now up 8% in the pre-market. We are getting ready for the bell here. Let's see what kind of movement we have going into the open. We're about 40 seconds away. Let's go. We are sitting at QQQ down about roughly 0.5% here. And yeah, we've got, what else do we have here? You've got Nvidia down about 0.5%, Best Buy 4.5%, Lowe's 3.5%. So we shall see. All right, here we go. 15-ish seconds.
Let's get the opening bell here in the CNBC Real-Time Exchange. And the big board, it's uranium exploration company Next Gen Energy at the NASDAQ. Rich Tech Robotics celebrating a recent IPO. Doing the honors is an AI-enabled humanoid robot.
The more we look into the self-driving, automatic, we look at the artificial intelligence self-drive for
Jonathan Delk here says, thank you so much for creating a separate channel for politics so I don't have to watch it. I can't stand politics. Well, as Dep Store here says, Poverty Chat is the best. I didn't say it. He said it. JR says, what was the reason you stopped doing multiple channels last time? It was because I had 2 employees who were managing it who went to an opportunity in Dubai. I'm like, I can't manage all this. So I went to just one channel. So yeah, it had nothing to do with the success or failure of the multiple channel idea. But anyway, here we go. Again, I expect nothing today. If anything, red. I expect red today because you have the FOMC minutes at 11, Nvidia at 1. Let me give you the exact time actually on Nvidia. I'll be live probably at 1 so we can cover the closing bell, which is also kind of, I like the closing bell. I remember when I got to ring the closing bell. They gave me a coin. Have you ever seen the coin? Let me see here, though, if I can get this time. It's right here. I feel like one of those people where when you go in like the attorney's office or whatever, they just have like a crap load of stuff. Oh, Nvidia's at 420. Of course it is. Oh, we have Autodesk today as well. Jack in the Box. Oh, that's cool. But, look at that. They give you this little, what is this? Oh, that is actually kind of cool. On the back, oh, it's textualized too. It says, Meet Kevin, closing bell ceremony, December 9th, 2022. Dude, that was like the bottom of the freaking market. I don't know if that'll ever focus. Yeah, there it is. Look at that. New York Stock Exchange. It's kind of cool. And give you this little New York Stock Exchange carrying thingy majiggy. It sounds meaty too. Oh, that's nice. All right, back to the stocks. Where are we? We're watching the sticks go down.
Just close the fucking door. Close the door.
Okay. Lowe's is actually recovering at the AM here. So Lowe's is recovering. Dick's doesn't know which direction it wants to go, but it is up 8%. Enphase is down 0.6. QQQ down 0.5-ish. Best Buy's crashing. Oh, here we go. Best Buy's going straight down. Tesla's going straight up. It's up 20 bips now. It was negative. C3 AI is coming back to life. I think this company's a scam. I think they're like, I'm not going to mince words. I think they're a fraud. I don't know. I don't know if that's certain. That is an opinion. I am basing that on what I think is just them being clever with marketing, getting the AI ticker symbol, but I am unconvinced that their product is anything special. Is my opinion. OpenAI, don't sue me, bro. Free speech, bro. I will sue you right back. We have a staff attorney now. Anyway, so Intel down 0.7, Open Door down 5, Ulta's flat, SoFi down 1%, Target down 0.3, ARC 1.5 to the downside, Matterport. These small caps are stuck in the mud. It's because of the high interest rate environment. I think it's very tough for the small caps to actually break out in a very high interest rate environment. Have y'all seen what happened to MP Materials? You know, ever since like the death knell, I feel like for this stock was when when Tesla said we're going to stop using rare earths in our motors. Yo, Weeble, do I really need a pop-up to tell me the stock market will be closed and close early, Thursday and Friday? Go away. Nvidia is actually going up again. It's only down 0.3 right now, and it looks like it's trying to trend up. You've got to be kidding me. If Nvidia goes green into the closing, oh my gosh. What world are we in? Oh, it's going back to the good times. Tesla's up 0.5% now. Okay, this is actually really entertaining. Zoom's down 5.5%. Why is Trade Desk down 1%? You've got, Best Buy down 5. Oh, even they're recovering. Carnival, wow, they're stuck in the mud, huh? Wow. Oh, where did Ubiquity go? In pre-market, it looked like they were suffering. Oh, not at all. Yeah, their pre-market was down like 5%, and all of that evaporated right at the open. I think it's such a thinly traded stock. Okay, don't do this. Stop buying and selling stuff in the pre and post market. Like, you are literally getting scammed. The spreads are horrible. Don't buy in the pre and post market, please, for the love of God. Buy when the damn market is open. It's you know, like, the way to think about it is, okay, all right, let me give you an analogy here, okay? All right. It's kind of like being in RuneScape, and you're gonna go to the market, and you've got all the vendors. You could try to steal from the vendors, but you know, Kenny G's already doing that. Okay, no, I'm just kidding. But anyway, or maybe I'm not, I don't know. But anyway, if all the vendors are there, you could get a fair price on cake. So you want to buy a cake, okay? It's not that hard. You want to buy a cake, you can get a fair price on a RuneScape cake when all the vendors are in office. I actually had Lauren cooked me a RuneScape cake once, or she special ordered it, but it's nice to think she cooked it. But anyway, she got me a special like RuneScape cake once before. This is not it. It looked like this. This is from Google. I want to be clear, but it looked just like that. Anyway, if you want a cake and all the vendors are there, you're gonna get a good price. If all the vendors have left except for like one, and they just have a little bit of leftover cake, and they're wanting to keep that for tomorrow, you're gonna get ripped off because they're the only vendor. That's the best analogy I can give you right now. So anyway, all right, let's see what the suits are saying about this stock market open. Okay, all right, let's see here. Somebody, okay, you're an asshole. Somebody's saying, bro, I'm literally playing RuneScape right now, and I'm working. I want to play RuneScape right now, man. Okay, yesterday I went to Dave and Buster's with Jack, and then I got to look at what the suits are saying. I went to Dave and Buster's with Jack, and I go to pay with this credit card. As you can see, I turned it into, I put a little Cobalt restricted access card on it, and I also have the blue card and the green card here. And the person looks at it, is like, huh, I play a game that has Cobalt in it. Oh, that's an interesting card. Oh, okay. Thinks nothing of it. And I'm like, bro, Rust? And he's like, yeah, Rust. And I'm like, oh, that's awesome. That's why I have all the cards from Rust. I love games. Okay. Well, anyway, bond liquidity thins as yield carve. Oh, new trading range. Yields carve out. Okay, yields carve out new trading range. Okay, so let's see what's going on with yields. And oh, I gotta send the notification too for the Course Member Live. So we have yields right now sitting down only about 1.2 basis points on the 10-year. I would expect that after the minutes today, we'll probably actually see a downward movement on yields, mostly because the discussion that we had from Jay Powell was pretty dovish on November 1st. It is possible that some of that dovishness could have been revised away. So stay tuned. It's not a guarantee that they're going to go down, obviously. So stay tuned for that. That is, again, at 11. We'll cover that. But yeah, yield's not really moving at all right now. Let me look at the 2-year, and then let's look at the inverted yield curve. Okay, so the 2-year is actually up 5 basis points, and the 10-year is down 1. That's not great. That's more inverting. So let me look at the 10-2 and see what we have here. So the 10-2 right now says, we're 47 basis points inverted. What is this? It's so volatile. That inverted yield curve, it's so volatile. All right, whatever. And let's see here. Come on, boy. All right. Gaza hostage talks intensify with limited fight pause on the horizon. Fine. Zero Day Mania expands. Microsoft hiring Sam Altman won't solve its AI problem. Americans earning. Oh, here we go. That's not good for Enphase. What is this? Americans earning at least $100,000 begin to curb their spending. Here it comes. Richer Americans are curtailing their spending ahead of Black Friday. Womp, womp, womp. Also probably not good for Tesla. In the 3 months ahead of the all-important holiday shopping season, a group of retailers that cater to the upper middle class, including Apple, Coach, and Nordstrom, saw its biggest sales drop in 2 years, according to an exclusive analyst of Bloomberg's second measure data, whatever. The malaise also hit top-performing malls in wealthier areas, even as overall retail sales were higher. Uh-oh. Uh-oh. Okay. Somebody's like, Kevin's media business is bleeding money with 40K views per day. Man, you should see the analytics, bro. In the last 48 hours, we're at somewhere around 500,000 views across the channels. Okay, maybe it's more like 450 across the channels. Somewhere around 450K across. So we're doing just fine. We post a lot of content. So, if you put that would be like 200,000 views in one video per day, right? And then 2 days in a row, right? So you have to actually understand analytics before you can make comments like that. Despite record interest rates and soaring inflation, upper middle class have been driving a lot stronger than expected spending previously. Now people with at least $100,000 in income are starting to become more frugal. On Tuesday, Best Buy and Lowe's cut their forecasts. Kohl's reported its 7th straight drop in comp sales. Even positive results left investors wanting more PP at Abercrombie and American Eagle. Affluent shoppers often have an outsized impact on the shift of consumer spending, but are quicker because they have more money to splurge when times are good, but are quicker than the wealthy to pull back when they feel pressured. Oh, that's affluent versus wealthy. Okay, got it. Okay. So retailers and brands in the index experienced a deterioration in sales, blah, 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 blah. I mean, none of this is a surprise. You are going to see that softness, and it's going to lead to deflation. Very simple. We've already seen the price cuts. Vans, Costco is cutting prices like crazy. Bigger sales at Apple for Black Friday. Levi's on most of their products, they're cutting prices. And we've been watching these in earnings calls for a year now. We've been watching the transition. We generally do that in our course member live streams, by the way, which we have a course member live stream coming up in a couple minutes. Yeah, Palantir did get their NHS contract. Yeah, that is true. And Palantir is only down 30 bips right now. It was down about 2% in the pre-market. Enphase down about 0.7. Q's down about half. Dick's up 10%. Oh, people want that. PP. Best Buy recovering. It's only down 4% now. Look at Tesla surge. Let's go. Let's go, Tesla. Remember, somebody gave a sad crying emoji. I want to be clear about this. Somebody gave a sad crying emoji when they saw me put this chart up, that Tesla's contribution to the NASDAQ's gains were the lowest out of these others. That's a good thing. That means the joy is ahead. Hashtag no guarantees. You had the paper the other day when you showed Fed minutes previews from Citi. I looked everywhere on the internet for it. Where'd you find that one? It's a secret. Take screenshots, bro. Gain the lead. Yeah, we need that. Is it which? I don't know. I don't remember which button that is.
Sell.
No.
Gain the lead.
Got it. Okay. All right. I got to work on that. Anyway, well, this is good. This is good for the Tesla rally. Oh, it's starting to turn red. Dang it. Okay, that's the time. That's the cue. The queue is Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. All right. Tesla's still got a red candlestick, so I'm going to go now.